Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Just a little grains commentary for today, Monday, April the 20th. Let's start with corn. Only going to give it about 20 seconds. Did absolutely nothing. Remains in a range-bound trade of 370 to 390 in the front month contract. Looking at today, I think it lost a little ground because of that weak corn spread. There's also no news, and the only thing we're waiting for today is the planting progress. Looks like the market's looking for somewhere between 8 and 10%. Realize guys are saying it's pretty wet out there, and that could hamper progress this week. But as far as corn goes, it doesn't. I don't think that's really going to do a whole lot at this precise moment. We'll just have to see what wheat does tomorrow, and if that could help drag corn a little bit higher, so we can start to check out, the top half, or excuse me, the top quarter of this recent 20-cent range. Looking at the wheat market. I've said it time and again, everyone's been discussing how short the managed money is, somewhere in the neighborhood of 90,000 contracts now between Chicago and Kansas City. Today we saw, really, like I've said in prior videos, a test of that 490 area in the May contract and corresponding levels in the July. July got the move today. It was interesting throughout the session. A lot of people seeing some large orders underneath the market. It looked like standard procedure when they had walked it off the high. All of a sudden you saw 1,000-lot orders show up on the buy side, and it stayed there. As everybody knows, oftentimes those orders do get canceled. That was not the case today. You then saw the order moving higher. It was at that point 700, 800 contracts. People were front running it. You were seeing volume in front of it, and you did see a bid into the close. Let's recognize in times past they've sold it into the close every single day, it seems. Today was the opposite. So if you're going to hang your hat on anything, it was a firm close, and you've also got a tremendous short position that can decide to cover at any given minute. Realize wheat is nowhere near as liquid as corn, so if you have a situation where someone decides they want to get out of 10, 20,000 contracts, it's going to be a big deal. Moving on to soybeans. I think personally this was more of a technical affair today. You do have some discussion about a Brazil port strike again, or truck strike, excuse me. Recognize that the difference this time is they do have the beans in port. Before, obviously, we were concerned because they weren't able to access them. So we'll have to see how much of an impact that has. I think it's more technical. When you're looking at the July contract, we did get finally above those highs near 979 that had stopped us previously. We didn't see any fireworks higher, but I would say meal and meal spreads performed pretty well. And my feeling is the daily charts have improved quite a bit. Don't forget, there are seasonals out there that are bull spread meal and soybeans. It's interesting you saw July-November beans out to, I think, 21 3/4 briefly today. Recognize for the fundamentalists, that's a favorite short because when you're looking at purely supply, the attitude is, why is it that wide already? Still soybeans, we've seen multiple times in the last even 6 weeks or 2 months, they get caught pressing in the hole and the market teaches them a lesson. So if we can continue higher and take out today's high in the July beans, I think we're going to be at 990 in a hurry. That's probably going to put the November in a wheelhouse at 970. Recognize you're going to see large scale hedge orders all the way up until we know more information about how this crop's looking. So for tonight, we'll see what planting progress has to say. That's all there is for today. If you have any questions, give us a call. Again, this is Kyle with International Futures Group, a division of EFG Group in Chicago.